Hey guys, welcome back. I'm your trader Sam, and today I want to have a discussion with you about investing in Bitcoin. We're going to go over the dollar cost averaging strategy and talk about why I think it's not the best strategy to implement. Don't get me wrong, it is a very well respected and well renowned strategy, and it is a good entry level strategy for newcomers. But I think there's much better strategies out there, and I'm going to show you one of them. But please remember, guys, if you're finding value from this content, a like and subscribe will go a long way. It's really going to help build this channel. Also, I am not a financial advisor. Anything that I say in this video is for entertainment purposes. Okay, let's crack on. I want to start off by looking at this chart for Bitcoin. This is the BTC index, and I want to go back in time to previous bull and bear markets and look for correlations in the charts so that we can get a picture of what might happen for Bitcoin. Because I mean, you probably hear it all the time. Bitcoin doesn't always repeat itself, but it often rhymes, right? So if we go back to the last bull market, the beginning of the last bull market, the end of the bear market, so we sort of bottomed out there at the end of 2018, we can see that the last lower high on the daily time frame was put in at $4,407. Okay, so that last lower high was put in on November the 28th. Then we bottomed out December 16th. And just before that, the last lower high was put in November. We went sideways for some time, and then we broke out of this sideways range with very decent volume. So at the time, that would have been an indication, breaking out of that last lower high. Now it's time to start really taking Bitcoin seriously here and getting in some long-term positions. I mean, down here would have been a great place to obviously dollar cost average or, basically just to start investing. However, at the time, there was no confirmation on the charts that we would not go lower. Now, as a trader slash investor, we like to look for confirmation. So breaking out of this zone with large volume was the confirmation that we needed, this last lower high. And I'll show you why in a minute. We had a sharp move to the upside, and this was just basically a bear market rally, right? So it took us all the way up to the 618, and then from there we hit turbulence and price started to break down. Now, what's important here and what I want you to take note of, this last lower high was retested. After it being retested, we got that massive dump, massive capitulation event, and we dumped into that zone at the last lower high at 4,407. We closed a daily candle above that level. From there, price began to rise quite sharply. Now, from there, that was the full-on bear market. That's when we pretty much were just going one direction all the way up to 65K. What you'll often hear in the news is, or from other traders or investors is, okay, we're in a bull market, we're in a bear market, and they'll be calling it a bull market much too late because they're not using significant levels on the charts for confirmation. They're looking for much higher prices, and by the time they identify the market as being in a bull market, it's much too late. And a lot of the gains are already off the table. So we've looked at the bear market rally starting in 2019 and the bull market starting in 2020. Let's go further back in time and see if we can find some more correlation. Okay, so as you can see, the bottom put here in January 2015 at roughly $170. We went sideways for some time. Now, the last lower high was put in at roughly $316. We double bottomed here. We slightly breached that zone, probably just to take a bunch of liquidity, and we proceeded to go up and test $316. We broke out of the last lower high with significant volume that we can see here on the charts. We came back down, we retested that zone, and then we proceeded to get the rise. So that right there could have been the validation that the start of the bull market is happening. And after that, it was all she wrote. The price just started to skyrocket. Let's go further back and see if we can find some more confluence. Okay, so after this sharp drop, we bottomed out at $2. This is back in 2011, by the way. We managed to put in a lower high at $3.82. Now we came back down, retested that bottom, taking liquidity out, And then we came up and we tested the last lower high. We broke out of that last lower high, and then we did eventually come down, and from there price proceeded to sharply move to the upside. So now that we've looked at that information from the past, what can we now do with it? Well, the beauty of this is that's just facts. This is not my opinion. We are going to hear a lot of people talking about their opinions, and really opinions don't matter. We'll be hearing a lot of fundamental analysts being extremely bearish. And whilst it does create a lot of content and news, it doesn't help us. It doesn't help us in the slightest with our investing. It will make us completely miss these moves that are happening, because fundamentals, they're almost like a lagging indicator of what's really happening on the charts. The last lower high was put in at 25,000 roughly, okay? We had confirmation of this when we broke out of that zone and had the retest. Now, it is possible, again, that we retest this zone once more. Now, I think it is highly possible because we haven't seen a retest with massive volume yet. I'm expecting that we will retest this zone with significant volume. We could come quite deep to within this range here that we broke out of, scaring a lot of people. Already people are extremely bearish. So this would scare people, seeing another little capitulation event would shake out a lot of the people with no conviction really. The people that listen to the news and are expecting this to go down much further. Don't get me wrong, just because we've looked at these scenarios playing out in the past and the last lower high being respected, it doesn't mean that it has to happen again. Bitcoin is a very new asset class. However, I like to position myself on the side of probability. Now, as an investor, you're going to be looking to get in at stages. So getting in now at 26K is a perfect stage to be getting into Bitcoin. It's not too late at all, and it's not too early. I think right now, definitely if you're someone who's going to be investing at a lot of different stages throughout the cycles, now would be a perfect time to be getting in. You'll not look back and regret at getting in now at 26K. That's just a fact. It's pretty much a given that in the next year or two, we are going to come and test these highs at 69K. So when we are up at these highs and looking to push on much further, you're not going to look back and say, oh, I wish I got in much earlier than 26K. I really think until this kind of setup is broken and we see the last lower high completely lost, where price comes down here and goes much lower and closes down here at around 19K, or even, continues to go further. Until we see something like that happen at this stage of the cycle, we shouldn't just expect it to happen because it hasn't happened before. So I think it's much wiser to position ourselves with the forethought that things are likely to happen the way they have happened in the past, especially as we see things lining up right now. It'd be the perfect scenario because we have all this bearish sentiment, and that's what happens typically when prices are bottoming out. And the opposite is when we are topping out, right? We hear everybody talking about going to much higher prices, and price actually starts to reverse, and people are in denial. They still think that it's going to go much higher, and it doesn't. And that could be the case right here. We could have these people in denial thinking that price has to go much lower. It just has to, because look at all the news. Whether we want to get into Bitcoin right now, or if we want to wait for a massive liquidity grab below 25,000 and for price to come back up and close within this zone, just for that little bit more confirmation, we still need to have other levels marked out on the charts, just in case we get that further drop down, which could obviously happen. So what we would want to do is, we want to look for more levels beneath where price is likely to find support. We can see support coming in within this golden pocket zone. And we can see this because this lower high put in at 21,247 in October, we had price break above that level and then retest that zone. And that happened all within this range here. So we could use this range over here between the golden pocket and the 786 as our next level of interest if price were to fall down here, because we can see that price moved up very quickly from this golden pocket region to the 25,200 level where we had the last lower high. So if price were to fall down beneath, we could get a very fast drop to our next level of major support, which comes in here within this golden pocket and 786 region. We could be looking for a test of these lows to grab more liquidity right over here, or if we could be looking for price to stop here within this zone. Now, as investors, we're not going to be worried too much about whether we get in at the top of this zone here that I've identified or down here. What we want to make sure is that we're not over leveraging our positions, and that we are actually executing our plan. So there's no point of making a plan and then price gets there and you freeze up. You need to be extremely systematic. You need to have your plan well thought out, and when price gets to your plan as an investor, you need to execute. We're not looking to trade, we're looking to execute on these positions. Now, after that level, the next major level of interest would just be the lows over here at 15,600 approximately, where we do have this high over here at 13,613 as well. So within this, I'll just highlight it, within this range over here, right? That would be the next level of interest. Now, just going back to what I said before, just to show you guys how I view things, and this might help you a little bit as well. I was mentioning this zone over here between the golden pocket and the 786. Look, we do also have this high from 2017 as well, which will act as major support as well. And as you can see, that comes in just above the 786. So these are all things that you look at to add up confluence. So I'll also just highlight this high so it makes it a little bit clearer for you. So that's what you want to be doing. You want to be highlighting these major levels on your charts, looking for confluence, looking for areas where you are interested as an investor. And key note, guys, areas, because we're not trading here. We're not going down onto the 5-minute chart and looking to snipe entries. These are long-term holds. Now I want to talk a bit more about dollar cost averaging. So dollar cost averaging, if you don't know about it already, there are many forms of dollar cost averaging. One very popular form of dollar cost averaging is the set and forget strategy, where people will have their exchanges set up so that money is automatically taken out of their account and Bitcoin is purchased. Over time, I don't see any downside to this strategy because I do believe Bitcoin has a very bright future and it is one of the better investments out there. However, I don't think everyone should limit themselves to a dollar cost averaging strategy. I do think there are strategies like this one mentioned in the video that can greatly enhance your portfolio. So that's it, guys. Don't forget to like and subscribe. We've got lots more content coming your way, collaborations with other analysts. Check in the description below. There's a link to our Discord community where we provide these kinds of setups daily. Take care, guys, and I'll see you on the next one. Ciao.